Senator Elizabeth Warren penning an op-ed in the Wall Street Journal today saying companies shouldn't be accountable only to shareholders.
Senator Warren explaining more to Jim Cramer on Mad Money.
Let's get these corporations to charter federally, the ones that have more than $1 billion of sales every year. And let's have a couple of features. First one, let's put some employees on the board. Second one, let's change the compensation structure for the CEOs to say that the CEOs will not be permitted to juice the price, and then once they juice the price, make a quick sale, make $1 bazillion, and keep emphasizing the incentives. That's what we've got now for short-termism. Want to get rid of that.
All right, joining us now, CNBC contributor and former Medtronic CEO Bill George. Also with us is Bob Johnson. He, of course, the founder of BET. Gentlemen, good to have you. Bob, I go to you first. What do you think of what the senator wants to do?
Well, first of all, I think that the senator, I give her, as I said, an A for good intentions. But I think boards are already engaged in many of the issues that she's raised. Most companies and most boards look at all of their stakeholders, not only their shareholders. They look at their employees. They look at the community where they reside and do business. They look at even the vendors that they do business with. So I think it's a solution in search of a problem that's absolutely not necessary. And I believe in her, again, best intentions to channel Robin Hood. It has the dangerous potential of channeling Karl Marx and putting us on a slippery slope for that kind of government control of the way a free market capitalistic society is supposed to operate.
Bill, what do you think?
I think Bob said it very well. First of all, Senator Warren shows a fundamental misunderstanding of the law. Most corporations are governed by Delaware law, and it says that the board should consider the interests of the company and its shareholders. So it's not strictly its shareholders. There are 19 states, including Minnesota, where my former company Medtronic's based, that say they may take into account the interests of customers and employees and society as a whole. And I think what's happened, the corporation, the CEOs and the boards have been very much moved towards where Bob Johnson is, that we take into account all these things. My colleague Michael Porter brought forth the notion of creating shared value. That's shared value for your customers, like Doug McMillan has done at Walmart, or Jeff Bezos has done at Amazon, or Ken Frazier has done at Merck. It's shared value for your employees because they have jobs. They get well paid for those jobs. The better the company does, the more money they make. And I think it creates ultimately value for society, but that's the way you create shareholder value. You can only create shareholder value by creating great products and services for your customers. And if you don't do that, you'll be out of business.
Forgive me, Bill. Bob, there are many, deemed to be controversial parts of this prospective legislation. I want to read you a part of the op-ed today and get your reaction to this one line. She says, the senator does, to address self-serving financial incentives in corporate management, directors and officers would not be allowed to sell company shares within 5 years of receiving them or within 3 years of a company stock buyback. That certainly got my attention as something that I would expect CEOs, former or current, to have an issue with.
Well, absolutely, because you got to remember that millions of people, not rich people, but millions of people own stock in the American enterprise, I would say, corporate America. And if a CEO is able to drive value in the share price of the stock, that same value is going to accrete to the individual small mom and pop shareholder. So I don't think anybody would begrudge a CEO from creating value and after a period of time, selling that stock. That's what we hire a CEO to do, to create value, and we reward them for that value. So I think that the senator, like I said, her intentions may be great, but putting the government in the middle of how corporations in this country are run is a slippery slope towards a socialist economy that does not, in my opinion, work in the American system. I'm a direct beneficiary of what capitalism can do. I grew up in a family of 10, first to go to college. Because of support from CEOs like John Malone in the cable business, I was able to create a multi-billion-dollar company on the strength of that kind of support and commitment I got from an industry and from an individual. And I think the same thing applies to any entrepreneur who wants to grow. They can find ways to compete in the best interest of the community as well as themselves. So a lot of the people who are on boards, and I've served on a lot of boards, they believe in a double bottom line. Do good and do well. In fact, I don't think you can survive in this very competitive economy unless you're willing to take into account all of your stakeholders who are necessary for you to create significant value.
Well, that's a good point. Final word, Bill George, if you could keep it quick. We're running out of time. This idea that CEO pay is tied to equity more and more these days, and so they have a financial incentive to reward their shareholders above everyone else.
No, I think they have a financial incentive to run the company. All the boards I know and all the stock grants, restricted stock grants, stock options are all time-based, 3 to 5 years. So we're already doing that. You can't just take stock and sell it the next day. You have to be vested. Everyone is doing that. This is a good thing. We're aligning not just our CEOs, but all employees with the shareholders' interest. We want alignment, and that's the way you run a company. And she's got some data in it. It's just flat out wrong. The idea that companies have extracted $7 trillion from the economy. They've created $7 trillion in value, or that 93% is going to shareholders. That's wrong. The figure's closer to 37%, as NYU has said. So, we just got it. She doesn't really understand how a corporation works.